This is Don Kaufman inviting you to a very special presentation, How to Survive and Thrive in Volatility. It's February 27th at 7 p.m. Central Time, 8 p.m. Eastern Time. Sign up for that now at TheoTrade.com/thrive. Again, that's TheoTrade.com/thrive. Now, at this special session, we're going to be discussing why volatility, it's all about risk in the marketplace, and how you can actually use it, harness it to increase your success in the markets. We're also going to discuss in depth what works in volatile markets. Okay, so you can profit from it. Discover how to build a couple of trades with defined risk and really maximize returns. We're also going to have a detailed discussion about implied volatility, but more importantly, how to use that to your advantage. Listen, again, it's February 27th, 8 p.m. Eastern Standard Time. Listen, the bottom line, the volatility that we're seeing right now, you have to take a two-pronged approach. First, we've got to get you defensive. Whatever positions that you currently have on, we have to teach you how to effectively defend those particular positions, how to actually reduce risk, harness risk. Because if you can't handle the risk that you have on right now, you have no shot at degrees of profitability. The second portion of this is really going to how to be on the offense, how to go out there and how to strategically take defined risk positions to actually harness some of the volatility. Again, a very special session, How to Survive and Thrive in Volatility, February 27th, 8 p.m. Eastern Time. Go to TheoTrade.com/thrive. Sign up for that now. It is completely free. With that, let's get to this evening's video. It's Don Kaufman here, February 26, 2020, and you are watching the TheoTrade evening video. With about 9 minutes left inside of today's trading session and following two absolutely wild, volatile sessions. You know, if you tuned in right this moment, you saw the S&Ps, you'd think to yourself, it's not so bad, right? They're only down about 10 points. Look, freeze the screen for just a second. The S&Ps, they're off about 9 or 10 points. The Nasdaq here happens to be positive of the day. Look at those ranges from high to low. S&Ps throwing off, again, 90-point range. The Nasdaq, people, it's Mr. Toad's wild ride once again out there, which leads us, I think, to the big question, is this it? Is this the end of the bull marketplace? We're going to explore just that here momentarily. But more importantly, we're going to look at some trade opportunities in the very near term. You know, one of the things that just really resonates with me, first of all, the overall movement inside of the S&Ps is nothing less than monumental. Again, looking at this just on a chart, it just doesn't do it justice. You know, like, all right, we were down here, and then we came up here, and we came down here. Listen, stop for just a second. Zoom in, all right? This is just a very brief kind of few hours in time. We're just channeling back and forth on the S&Ps. And as I said, it doesn't look like all that much until you zoom in on one of these candles and you start recognizing that, first of all, these happen to be 1 minute candles. Secondly, we're talking about throwing off ranges of what? Okay, that's per minute. These are 5 and 6 point moves every single minute. We're getting moves up to 7 or 8 S&P handles per minute. So you're looking at the S&Ps right now and you're thinking, they're only down 8. It's not that bad. Okay, put away the volatility hat and store it in the closet for a while. It's bad out there. It's rough out there. And that's exactly why we're asking that question. Is this it? Is this kind of the beginning of the end? Again, I'm going to show you precisely why I'm exploring just that. Couple things that I want to start with here. First and foremost, we're talking about, that's it. It's the end of the bull market. Whoa. We ain't home yet. Okay. First, let's show you some of the sectors. Okay. And really the major index products that have been beaten up. Okay. Really the most. And I'm only going to call this a 2-day sell-off. Now, I'm actually going to go over to the Qs right now, and I'm going to pull up a daily chart. I recognize that some volatility maybe started in the previous week, maybe a little sell-side activity here on Friday, but come on, don't kid yourself. It really only kicked into high gear on Monday and Tuesday. Here we are on Wednesday, and people, these are some outside trading sessions. The reason I wanted to pull this up, I'm actually also going to pull up a year-to-date percentage, because what defines a correction? Okay, you're not even at correction territory until you've had, okay, roughly a 10% pullback. Now, if you look from right there at the absolute high to the right there at the absolute low, all right, technically speaking today, for a brief and fleeting moment, we did hit corrective territory on the Nasdaq. But again, kind of define corrective territory. And corrective territory is, well, nothing more than, again, okay, a 10% decline from high to low over here, if you want to get technical about it. So when people are talking about it's the end of the marketplace, quite possibly. But I wouldn't look. And if it's, my capital, I'm not looking at the Nasdaq to decipher that. I'm not looking at the S&Ps to decipher that. Okay, I'm going to be looking here in a moment at the bonds. Speaking of which, so we got the Nasdaq and for a brief and fleeting moment into corrective territory. I'll do a big timeout for a second. I'm looking at the screen the exact same way you are. And at this point, you just have to sit back and wonder, like, when's that rip your face off rally coming? I was looking for it throughout the course of today. And when I talk about, the quote unquote rip your face off rally, what that effectively means is we're looking for traders that have been shorting on the way down. Why do they short on the way down? Because they're dynamically hedging. Okay. This is not about somebody taking directional risk. And I just beg you to understand that dynamic. All right. Nobody's out there necessarily in, these big trading firms. They are not out there shorting because they think the marketplace is going down. All right. These big trading firms are out there. Okay. And they're dynamically hedging. They're shorting because the market is going down. And these big trading firms, they actually, use delta. And they may be carrying a ton of positive delta. And how do you offset positive delta? By adding negative delta, kind of balance out the entire equation. So they'll short on the way down to neutralize the positive positions, right? So it's kind of like you own a ton of Apple, you got to sell a ton of S&Ps. Now, eventually what happens to them, is you kind of hit this inflection point. We turn, and then they cover the shorts, and we just rip your head right off the shoulders, and we'll explode back to the upside. It's one of the hallmarks, if you will, of volatility. And it's not playing out. And that, people, that's intimidating. It's really intimidating to see that. And it starts to bring up the idea, and I was bringing this up on the weekend video, and I'm going to bring it up again. I've talked about it incessantly. It's called what I term the bidless beast. Okay? The problem you have right now, I know there's only 2 minutes to go to the close, but the problem you have in the overall markets right here, right now, it's not about stock buybacks. We'll talk about that down the road. Hey, eventually, if the sell side continues, believe me, nobody's buying back their own stock because they're going to be stuffing cash in their coffers. Everybody's like, batten down the hatches. You don't buy back your own stock when the marketplace is tanking. No, of course not. They only buy back the stock in the bullish market, which makes absolutely no sense. What you have to start worrying about right now is you. Why? You may have a 401k. You may have an IRA. You've just seen 2 hideous days. You're looking for a bounce. You're not getting one. Now you're getting nervous. Okay? The probability of people starting to dump out of their 401k, it is going up. It is soaring because there's a lot of people out there that have those 401ks. They have their IRAs and they've seen, what's occurred over, umpteen years in a row. Well, that's 9 months, but we could pull up a 5-year. And some of you are, a little sharp and you might say, I want to get a couple of redemptions, bail out of this a little bit. You're going to laugh. You're going to cry. As soon as you go for the door, so is everybody else. Okay, you're not the first one to actually have thought of bailing out of part of the 401k and shifting some of that maybe to short-term bonds. By the way, it's not a half bad thought because again, going down from here, there's just no coming back from this. And that's why we're kind of questioning, is this the end of the bull market? Because again, a few major down days changes everything in this business. Now, forget for a second, push aside what we might think about the coronavirus. There could even be some good news maybe around the corner on it. It doesn't matter. All right. We've basically opened Pandora's box of volatility. All that matters now is what's going on inside of trade. So I covered a little bit about the Nasdaq. I also want to take just a quick glance over at the Russell, because if you haven't looked at the Russell, right, the small caps, I mean, come on. They are just bleeding out. They are getting hammered in small capville over here. That, people, is hideous. That's a hideous enough that you can see it on a 10-year chart. That's hideous enough you can actually pull it up on a monthly chart, and we're already making headway. And that's, again, it's alarming to say the least. And that's why I'm bringing up the bigger question, of course, in light of everything that's going on. All right, so let's push aside even the small caps, which, again, are absolutely bleeding out. With that, let's look at VIX and volatility. So the VIX itself, it didn't back off an inch. Now, the S&Ps are down a little bit, but you would have anticipated, like the VIX guy, heated, all right, into the 30 handle. It's still poised substantially higher. The volatility futures, yeah, they're down a little bit today, but you got the Nasdaq. I mean, listen, the S&Ps right now are down 16. That's not even like a down day in terms of volatility. You know, you got to move 40 or 50 points. You got to get the world rocking before I'm going to call this a down day. There's the closing bell. The bottom line, though, is volatility isn't backing off, which promotes the idea there's probably more risk to come. All right, so VIX and Vol are not backing off. I've also got to deviate over here to the SPX. By the way, speaking of the SPX, we told you this past weekend that there was something drastically wrong, okay, with expected moves, and that we were likely to make a substantial move. Substantial move and this, okay, two very different things. I mean, we're looking right now, and we're on the verge. We're threatening 4 deviation territory right now. All right, so it's Wednesday. You made it through half of this week. The S&P's just closed down 20. When I talk about 4 deviation territory, the expected move is $54. Just quickly over here, when I talk about that, you know, so it's $54 expected move times 4 equals, all right, a 216-point move. Well, we're just starting the week. We started the week right here, 3,337, okay, minus where you're currently at, which is what? 3,116 equals 221 points. Yeah, you see what I mean? Okay, you got 4 deviation territory at this point. And again, every trader's looking for the bounce, and you're just not getting it. So at this point, that's when I start looking over here, okay, in quite some detail. I'm actually going to defer to the volatility. The volatility speaks volumes. Just between now and like Friday, we're still expecting a $72 move. That is, again, put on your big boy pants. You only have Thursday and Friday left, and you're expecting a 72-point move. But at the exact same time, you know, people are going to say, oh, that's huge. I should sell that, right? Not a chance. You just saw a 100-point move on Monday, a 120-plus point move actually on Monday from high to low, okay? 100-point-plus move on Tuesday. Here we are in the S&Ps, including the overnight session, a 90-point move, right? And they're only giving us, what, $72? It's still not right. And I'm stressing you this, okay? We could move a lot more than the implied volatility is giving us credit for. We are wound up right now, and I am giving a firm warning. Yes, absolutely unequivocally, in the shortest duration, we're oversold. But volatility has yet to actually erupt. And that's something that you better keep very close, okay, to the kind of, you know, right to the forefront of everything that you're thinking about in this marketplace. All right. Bonds are still holding, okay, 166, 167. They backed off a little bit today. But again, bonds have overshot the landing to a degree. This could be the first positive sign that we've even seen on the screen. But then you realize the bonds are only down some 15 ticks. The notes are only down 4 ticks over here. That's the most positive thing I can say about the marketplace, is that the bonds are backing off a little bit. Doesn't seem to make a difference, though, for the financials. Now, I told you guys, again, the financials would be at like the epicenter of this entire sell-off, okay? Are we right? Yes. But again, we ain't home yet. Pull up a year-to-date percentage. The financials, all right, they were up here. They were basically flat on the year. They're now down about 8%. You realize the Nasdaq is still underperforming those financials. Oh, I would look for the financials to still get crushed, all right? In fact, when I was looking at trades specifically today, I went to the bottom of my screen. I saw JP Morgan actually finished higher today. I don't know about you, but I'm bothered by that in a big, big way. So there are still outperformers in some of this sell side activity. The XLF is fading fast, but it's still outperforming. All right. The next one, absolutely hideous. energy. Why am I covering energy? Because I believe it's probably a pretty good bounce and fade trade. I'd look for a big time bounce inside of energy. If you haven't looked at this on a year-to-date percentage, it's hideous. It's down 21%. Even worse than that, I actually took a bullish position today in XOP. I used an in-out spread, got bullish over here. That thing is down 33%, people, 33%. So again, a number of positions that I've now put myself in specifically inside of XOP. So heads up out there. This thing, okay, it is going to be wild. Again, there's a couple of different trades I've put on inside of XOP. Just a very, very mild bullish position. I'm also looking for a very mild bullish position. And when I say mild, defined risk, mild bullish position specifically in American Airlines. It too looks a lot like XOP, getting just absolutely smoked to the downside. It's an in-out spread in there. All right, pushing that aside. Listen, I want to remind everybody that in the extremes of volatility, there's just really no place to hide. And I was talking about this in the weekend video. Eventually, they start to sell this marketplace, they're going to hit them all. And by that, I simply mean take a look at XHB. XHB has been the home builders. I've been incredibly critical of the home builders lately as what I call like there's a no place, to go over here. Interest rates have gone rock bottom. Doesn't seem to matter. All right, XHB is coming off hard and fast. You can see I've actually got risk twist spreads in here. They are deep in the money, people. These are getting wildly profitable. I mean, we're talking 200% and 300% returns, but we're looking for about a 500% return before I'm ready to actually bail some of the risk twist spreads, specifically the XHB. I also wanted to bring up the XLU because I've been highly critical of the XLU as of late. All right, it was up again just last week, 11%. It's now about 5%. You're not in full-blown corrective territory, and I wanted to bring this one up because it's still an outperformer. In a marketplace like this, you got to find the outperformers and you got to hit them. Listen, look, okay, for the strong in this marketplace, okay, to become weak. Look for the weak to bounce. What I'm talking about, like, what does strong mean? Like, what's strong in this marketplace? You want to see strong? I'll give you one idea, and then I'm going to cover this in chat over the next few days. Look at something like eBay. It's totally unscathed. Look at it on a year-to-date basis. The thing is still actually up on a year-to-date basis. A little bit of slippage, but it's unscathed. Stuff that's unscathed is coming off hard and fast. Stuff that's just been annihilated, the American Airlines energy sector, has got a pretty good shot for a bounce. Listen, huge amount to think about. The one thing, though, that really resonates with me in this marketplace, you haven't seen a bounce yet, okay? And you need to see a bounce at some point so we can actually reload and go into the fade trades. Again, huge opportunities, though, kind of facing us in just the next couple of trading sessions. Stay tuned. And for those of you, tune in to the chat room on a day-to-day basis here at TheoTrade. We are definitely executing some trades out there. Have a wonderful evening, everybody. Bye-bye.